the easier you're going to find one. Think about that, because that's the truth. The more things you try to hunt and research and try to find or try to trade in a way where you think you're never going to take a loss, they will come to you far easier if you were just to trade and accept the responsibilities of the risk and controlling that only, staying within your model's rules. So how does this equate to anything? What do we do with this message here? Well, your equity concern is you want to try to make money. You want to make the equity curve go up, and you want to go higher. You want to go higher on a leaderboard in a competition. You want to get a funded account challenge passed. You want to be able to get a certain payout. You want to be able to reach a equity high mile marker to be able to tell yourself that you can do this, show the universe on social media that you aren't a demo baller. All these things are contributing factors for you to make that equity curve go up. But what happens when the market says no? What are you going to do? What are you going to do when the market is not showing you that it's a time for you to plant in risk? Because trading is planting in risk. You don't know, just like a farmer doesn't know if that crop is going to yield anything. Think about it. They don't know. They're just doing the same thing they do all the time. They have a routine. They have a model. Begins with time. Well, there's a time to do everything, but not everything on that time. So a farmer knows there's a certain time. His model as a farmer, he's supposed to do something. And outside that time, he is not to do anything. And he is not upset about that because he is following his model or her model. You don't want to have this impulsiveness as a farmer to try to get ahead and plant before you're supposed to. And you don't want to be late. So the first emphasis is on time. That's exactly how I teach you how to read price action. The first ingredient to high probability is time. Is it time to do anything? Now, I mentioned through that daily chart that we were in that range, and until we left it, we were in a scalper's market. And that means that you have to be very, very nimble on a 1 or 5 minute chart and try not to have these expectations to hold for the full daily range. There's a time for that. We weren't in it. And that's why you saw this stagnant little choppy ranges where we would see a flutter here and there, sometimes 10 handles, maybe 15, but it was an erratic price delivery. And as a new student, I know that you don't have that skill set. You want it so badly, you want to be able to do it right now, and it's already a year late. That's the mentality and the motivation that you have as a new student. I understand that. That's exactly how I was. I wanted to figure it all out faster than I did, but you can't speed it up. And when I gave you the insight that we're in this range, it's not high probability, so you have to be careful. And then I showed, not because of anything more except for me wanting to tell you on that Monday or Tuesday 2 weeks ago on Twitter what levels I was looking for. The market was not interested in that. The things that I wanted to see on the high end or the low end, it was not interested in. So that told me immediately, unless something changes overnight, Tuesday of 2 weeks ago, into Wednesday morning, I'm not touching it. Left to my own devices over the last 2 weeks, I would have easily had an extremely low strike rate. And I talked to Tom Hugard in private here and there, and I told him, I said, I would have had about 12% strike rate. If we were being honest and we were sitting at a pub, not that I go to anything like that, but we were just hanging out, he and I told him, I said, I think, honestly, knowing myself, I would have had about a 12% strike rate, which would have been abysmal, hard. But knowing my tendencies, knowing how I'm going to interpret the climate, the environment, the ideas that I know are going to jump up in my head and say, okay, here's where you want to shine, IC. Won't have these instances where you feel powerless to get out of it. You'll think, okay, well, this isn't working anymore. Let me just kill the trade. That right there, that is excellence. I wish I had that when I was younger. I didn't. I did not have that. I had no one telling me, like I'm telling you right now, listening, that's what you want to do. Believe me when I tell you that is the answer. That's the solution. That's the thing you're supposed to do. And you're also indifferent to what happens after you get out. It's a bad relationship. Engage when I'm supposed to engage and not engage when I'm not supposed to engage, because I know me. This is why you cannot learn this in a workshop over a week. You can't learn this in a month. You can't learn it in 120 days. You can't learn it in 6 months. You can't learn it in 1 year. But at 1 year, you get a good foundation. And that's when the real learning starts. And I have never one time sugarcoated that. And so many people out there are trying to take what I've taught and still actively teaching, and you're trying to condense it down to something to market it to people for the real fast approach. And I swear to God Almighty, if there was an easier, faster way, I would do it. It would come right out of my lips and it would be done. I wasted time in the beginning doing that. Just like those environments where if you get in a market environment where it's not conducive for a low resistance liquidity run, where it just runs real easy, like a hot knife through butter, just slices right through it, no problem at all, going right to where you knew it was going to go and doing it faster than you were hoping it would do it. That's what I'm teaching you to look for. But they're not every day like that. Those exist sporadically in the right times, in the right setting. See, my tools in the right setting are flawless. That's why I can be to the tick. But have you noticed that it's not every single day that it's like that? Wait a minute, like, wait. Stop right there. Your motto is every week, every day, and it won't stop. You're right. But the market you're trading, that particular market, won't be every week, every day. This is always occurring every day and every week somewhere. You can't have an everyday day trading expectation of precision. You can't. You're just starting. Okay. You can't do that. In the beginning, you have so many obstacles in front of you. You have no idea the difficulty in this. And it starts between your ears and it remains between your ears. That 7-pound universe, that gray matter that we call our brain, has a wonderful capability of telling you things at the wrong time. And sometimes it tells you exactly what you need to hear, and then you ignore it to learn in this environment. But learning in this environment will make you so much better. You have to find yourself, and I can't do it for you. No mentor can, no teacher can do that. You have to allow yourself the time to find out who you are, how you're going to derail yourself, and you will. And you'll know right when it's about to happen. And that's why you're supposed to journal. And for the folks that don't want to journal, oh, I ain't got time for journaling, man. I got money to make, man. I got time to be journaling. I ain't writing books. I guarantee you these people don't make money, not consistently. I promise you they don't make money. Every high tech position in the world, all of them keep data on their performance, KPIs, every industry, every food producer, every commodity manufacturer, producer, any kind of company, they all have performance stats. That means they're doing what? They're journaling. Now, for the folks that don't want to journal in their trades and their development, doesn't that make you feel stupid? Like you're going to walk through this, no real effort is just going to fall on you. You're not skilled yet. You're finding yourself. You have to continuously instill this cheerleading mindset as you're growing up in who you are eventually going to be as a trader. You have to cheerlead yourself. You have to do that through journaling. Spend time looking at when you got it right. You're going to need those times. You're going to doubt yourself. You're going to doubt your future performance. If you try to trade every single day and you start going in the drawdown, here's another permission. You don't have to fix your drawdown right now. What? Yeah, you don't have to. Who says you had to do it right now? Who says you had to fix the drawdown and bring it completely back this week or this month? Who said that? You did. Or the people you hear others on social media crow on about, oh, this and that. Who's running your business? Them or you? Things. As soon as you recognize that you feel like you got to pray for the outcome of that trade to be different than what you think is already going to happen, because you know you're looking at the charts, you see it. Something in the underpinnings of the marketplace have shifted. You recognized it, and now your conscience is telling you it's time to hit the exit ramp. Remove yourself from the risk and walk away from it. And it doesn't mean immediately look for another pair or another market to trade and try to plant yourself in risk again. Everything I teach you is meant to meet the practical expectations of meeting ends, meeting one bill a month. Whatever the lowest bill is, that's what you aim for first. But something happens. Something happens in your mind when you first start dealing with these charts and you're demoing or you're rushing through that part by never doing the demoing, which is to teach you. You're learning who you are in the demo. That's why I can't stand these neophytes out there pretend to be mentors telling people you can't learn how to trade with a demo. You got to put some money, you got to put some skin in the race. Okay. I've done that and it fails miserably. And it gives you all of these anxiety inducing things that you would never have had if you wouldn't have did that. I didn't know the mistakes I had in me and the capability of me screwing it up because I never risked real money before as a younger man. I jumped in way sooner than I should have. I literally did like 2, 3 weeks of just back testing paper trades. That's it. And I did one walk forward, I think a week or maybe a week and a half at most, not even 2 weeks. And I convinced myself I was ready to put money into a live account. $2,600 on a Nations Bank, which doesn't exist anymore, Nations Bank credit card. Now tell me the sense in that. Zero. And it's no surprise. My first trade was impulsively in a market that I was never really interested in, orange juice. It's too thin. It wasn't even seasonally, looking back at it, seasonally, it was not even in a position where it to do anything. And I traded in a vehicle I had no experience in, options. But I had to do it. I got the account open. It's been 2 days. I better take a trade. And overnight, 50% of that account gone. Not the account, but the options premium. I paid $1,500 for orange juice option, which is extremely expensive. So I bought an overvalued option. I didn't know it. And overnight, lost $750 of that option premium and then closed the account that day. Wonderful lesson. Perfect illustration of what not to do. I wish we had demos back then. We had to do everything on paper, write it down in a notebook. That's how we did it. Make our own charts. We had to draw the high, the low, the open, the close tick on every single chart. If we traded it or monitored it, that's how we did it. You have no idea the advantages that you have today, but you won't use them. You're trying to rush through still. Don't learn how to trade with a demo account. Learn the broker with the demo and then go in with real money, even if it's a little bit of money. That's someone that is absolutely not making money consistently and they don't know how to trade, and you should not be listening to them. And I don't care who they are, how many people follow them, and how much they're liked right now. I don't care. And you can hate me. I don't care. That's real, because that's someone that doesn't even know what they're talking about. You have so many things going on in your mind that you're going to bring to this that are going to derail you. And you have to know what they are. And you cannot discover that without pain and loss or building in fear, anxiety inducing concerns for your equity with live money. You do that, you're going to be scared money. In the beginning, my second account that I opened up, I was terrified. Yeah. I worked 2 jobs, pizza delivery, everything I could. Picked up cans, turned them in and redeemed them for money. I did all that stuff, folks. I did all of that. Walked down streets, picking up soda cans, beer cans, all that stuff. I did that just to get whatever I could scraped up. So don't talk to me about you don't know what it's like, ICT. You don't know what it's like. You don't know what I did. You don't know what I went through. But that second account, I was terrified. Terrified. I was afraid of every possible entry. And you're wondering, why the hell does ICT have all these concepts? Because I had to cope with it. I wanted to have an arsenal. My weakness was fear of knowing when to get in. Bro, let me tell you something. I got 81 ways to get into a trade. 81. And that's why these jokers on the internet will say, oh, he's got something to always explain why the market. You're damn right I do. I know it like the back of my hand. But I also know when it's likely to slap me around, I'm not playing. No, thank you. I've been there before. You haven't. You're too new. You don't even know what it looks like. But I'm sharing that experience with you. I'm allowing you to find yourself in a closed circuit environment where you are not incurring monetary risk. That's why I teach with a demo. That's why it's the best way to learn. That's where you need to learn in a laboratory experiment setting where you cannot lose money and build anxiety inducing mindsets that's going to be a prevention to you finding success. How much plainer do I have to make it, folks? Stop listening to these kids pretending to be money millionaire mentors, okay? They literally just graduated school. They probably dropped out of college. They have no idea what they're talking about. The only money they got in their accounts is from whatever they sold, whatever their affiliate programs are. They're multi-level marketing garbage. They're not trading. They cannot trade. They will not show you what the market's going to do. They cannot do it. So why the hell are you listening to their advice? Because you see them pretending with their pomp, their rented cars. I own my cars. I own my home. There's no note on my cars. There's no note on my homes. And I show you where it's going to go. I execute on it and I use the logic. And I'm telling you when it's not right for me. By example, I stopped. I walked away. Now think, who do you want to learn from? Somebody that can walk the walk and talk the talk and press stop and know why and have no concerns for, well, I might miss something. I don't have any fear of missing out. You never hear me say, whoa, Why did that happen? Why did that slap in the ES just happen? No, I'm not surprised by that. But I can go into a week where I'm expecting certain things to happen and they don't manifest. Okay, I'm not surprised by that. I'm just not interested. See the difference there? That's experience. That's 30 years, baby, of doing the same stuff all the time, expecting the expected results at the end of it. But if it's going to show me signatures that are not supporting what I'm teaching you, that's not an invitation for you to find a new way of doing it. All these new guys and gals out there trying to reinvent the wheel. I've already gave you the wheel. You have to build the car on top of it. And some of you don't want a Lamborghini. Some of you are just okay with a pickup truck, a Volkswagen, a Jeep, or even, well, I won't go there. What's he going to say? What was he going to say? ICT, please tell me what you're going to say. No, I'm not going to do that. But there's a learning curve to this that nobody really expects to exist until they step into it. And they don't like it. It's a reminder to them that everything worth doing requires a lot more effort than you thought it was going to take. There's no shortcuts to this, folks. I am the shortcut. I promise you, even though it seems like it's long-winded all the time, this is the shortcut. You cannot make it simpler than this. You're waiting for the market to go up to run stops or reprice to an inefficiency. It's going to drop to run stops or reprice to an inefficiency, or it's going to go sideways. And guess what? When the market's going to go sideways, ICT is doing something else. It's going to be in the speed at which you receive it or get to it, and be comfortable with that. The harder you push to make it sooner, you're just pushing it further down the line. I swear it's the way it is. You just got to enjoy the process, go through it. And one day you'll know you're ready. You won't feel impulsive about anything. You're comfortable. You'll be able to navigate. You'll know this is a market in a condition right now. You don't want to touch it. And you don't care who else is making money. Who cares? Well done. Good job that you made money. It doesn't mean I have to do anything. It doesn't mean I'm less of a trader. What? That's not what you see on social media, is it? I don't want you to think that way. I don't promote that idea. Your results are yours. 2022.